How Warren Buffett uses fear and greed to his advantage. Imagine waking up one morning and discovering that the stocks you own have fallen 30%. Your first instinct might be to sell. Now, imagine that instead of selling, someone calls you and offers to buy your entire business for 30% less than yesterday. Would you immediately agree? Probably not. And that simple difference explains something profound about Warren Buffett's investing psychology. Buffett understands that a stock price is not the same thing as the value of the business behind it. And when fear takes over the market, that distinction can become incredibly valuable. Here is the part most people miss. Buffett hasn't eliminated fear and greed. He's learned to recognize them without allowing them to make his decisions. Think about what happens during a market crash. Investors watch their portfolios fall. Headlines become frightening. Social media fills with predictions of economic disaster. Suddenly, people who are excited to buy stocks at high prices become desperate to sell them at much lower prices. That's fear. But markets can experience the opposite problem too. When prices keep rising, investors become increasingly confident. Everyone starts talking about the next big opportunity. People begin buying businesses they barely understand because they are afraid of missing out. That's greed. Buffett's advantage comes from being willing to move in the opposite direction when the evidence supports it. But there's an important warning here. Buying simply because everyone else is afraid is not Buffett's strategy. A falling stock is not automatically a bargain. If a business is losing customers, drowning in debt, losing its competitive advantage, or facing permanent damage to its economics, a lower price may simply mean the business is worth less. This is where Buffett's approach becomes much more interesting. He practices what we could call emotional arbitrage. Instead of trying to predict exactly what the market will do tomorrow, he looks for situations where other people's emotions have created a gap between price and underlying value. Fear can make investors underestimate a good business. Greed can make investors overestimate a mediocre one. And Buffett tries to position himself on the rational side of that emotional mistake. So how can a beginner apply this? Start with 3 questions. First, if the price falls, has the actual business changed? Second, if everyone wants the stock, am I buying because the business is attractive or because I am afraid of missing out? And third, what would I think about this investment if the stock market closed for 5 years? That last question is powerful because it removes the addictive feedback loop of constantly watching prices. You don't need Buffett's billions to practice this. You need temperament. You need patience. And you need a process that protects you from yourself. The next time the market crashes, don't automatically think this is a buying opportunity. Ask something more intelligent. What has actually changed? If the price has fallen but the economics of the business remains strong, fear may have created an opportunity. If the business itself has deteriorated, the falling price may be telling you something important. And when everyone around you becomes euphoric, don't automatically become bearish either. Slow down. Because the greatest danger in investing isn't always losing money. Sometimes it's becoming so confident that you stop questioning why you are paying the price you are paying. That is perhaps one of Buffett's greatest lessons. The market will constantly offer you emotional invitations to buy and sell. You don't have to accept every invitation. You can wait. You can think. And you can let other people's fear and greed create opportunities for you instead of allowing your own fear and greed to control you. Because in the long run, your biggest investing advantage may not be your intelligence. It may simply be your ability to remain rational when everyone else stops being rational. If you want more practical lessons on investing psychology, wealth building, and the principles behind Warren Buffett's extraordinary discipline. Subscribe and stay with me.